Thank you for joining us here on Squawk. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. And as usual, we start the show with the latest financial news, the market stories, and to help me give analysis this evening, Mohammed Bright Ties Nala from Nedbank Capital and Nick Norman-Smith from Lentis Asset Management. You can learn a lot, Nick Norman-Smith, about the dress code. You're quite conservative this evening, Mohammed, quite conservative.
Not quite, because I must just pull this out of my jacket and say, this is about as close as I could possibly get to that tie you disliked so much the last time around, and I'd love to see you wear this on air.
I'm sorry, but there is there is a mix. It's a mixture of let's have a look at it.
I think I counted that 7 colors in total. So, awesome. Like I say, in total, as close as you're going to get in the local market.
It's astonishingly fetching. Thanks very much for that. I most certainly will wear it. It has a little saffron. You see the saffron. It's not yellow. It's saffron, a bit of pink. It's
glad to contribute to your style, your sense of style.
Well, yeah, you're contributing to something. I'm not sure if it's a sense of style, but thank you very much. Let's talk market activity. David Shapiro is with Warren Buffett today, so he's not available to be with us. Somehow Warren Buffett has a greater appeal than we do. I don't understand it myself. But since he's gone away, the market has recovered. We should send him away more often, Mohammed.
I agree completely. It also works quite nicely. Our market's been sold off, fairly aggressively. Peak to trough, it went down to around 10% off its peaks, and looks as though it's finding some support here. But a lot of that impetus coming from additional speculation that the ECB is going to come to the market with either a rate cut or some additional stimulus next year. So pretty much an extension of what we saw a few weeks ago from the Bank of Japan. And I get worried when the markets seem to be addicted to the stimulus drive that propels everything a lot higher.
And that is what's so scary. But it's not even addicted to the stimulus drive. It's addicted to the hope of a stimulus drive, which makes it even more terrifying, Nick.
Yeah, look, it's trying to forecast anything is tough. Trying to forecast what politicians and central bankers do is probably the hardest thing in the world. But yeah, that's what drives markets in the short term. And yeah, we've seen the yen carrying on hitting sort of record lows and speculation about where that money is going to go. But I don't know, for us at Lentis, all the more reason to just try and ignore it and look at underlying valuations.
Because one looks at some of the fundamentals of what happened last week in the market, and there was a very sharp sell-off, particularly in resources shares. Why? Because commodity prices came under pressure. Now, in that lies perhaps an opportunity.
Yeah, and remember that some of these commodity prices are still quite elevated. So the prices of commodities like copper and iron ore have been driven up to massive premiums over their marginal cost, which is where they're going to sort of move along in the long term. And that's obviously because of all the expectation of China's massive demand. But when China's consuming 60% of the world's iron ore, if you see a little bit of a hiccup in that country, there can be some significant downside risk, and there is still quite a bit of steam in those prices. They're still looking quite expensive, some of them.
He talks about hiccups in China, but I think China's got a sense of indigestion. It's just before the hiccup comes. Is there a sense of indigestion in China?
Again, you see, the market tends to get a bit of ahead of itself. So they were forecasting Chinese growth at 8.5% and then 8%. So when Chinese GDP comes out at 7.7%, all of a sudden it's this huge disappointment. Quite frankly, 7.7 is fairly healthy. It's above the 7.5% target that the Chinese have set for themselves. But a lot of that froth has to work its way out of the markets. We've seen commodity prices come under considerable pressure. On a technical basis, yeah, we might see about another 4 or 5% worth of downside before you see some support in something like the CRB or the London Metals Exchange Index. That being said, looking at a lot of our resource counters on the domestic market, they've been oversold for some time, and it's looking as though they're looking ready to turn. So there might be a bit of an opportunity here should we see a bit of a bounce come through. And we've already seen stocks like Billiton's, like Anglo start to trade off their lowest levels we've seen over the last few months.
So nice recoveries coming through there. Also lots of news coming through, lots of updates coming through. I'm quite surprised to see that finally British American tobacco is beginning to see volumes come under pressure. I think Lucky Strike sales and Kent sales or something were under pressure. I don't know who smokes those things, but British American tobacco, has it peaked?
It's one of those stocks that have looked expensive for a long time and then continues running. The fact of the matter is that you're going to have consumers coming under a bit of pressure, and even though it's a defensive stock, something like a British American Tobacco, people don't stop smoking overnight. Whether we see a shorter term peak and a bit of a pullback, I still think the underlying demand for a lot of the products are still there. People tend to smoke, whether it's bad times or good times. It's a question of when you choose as your entry point to get into that stock.
In good times you smoke more because you're so happy, in bad times you smoke more because you're so sad. It's one of those great companies which relies on the filthy habit of its customers.
Yeah, and our investment thesis on British American Tobacco, we've been happy shareholders for a couple of years now, has been the rationalization and the cost cutting, really. As you say, volumes are pretty stagnant. They're actually dropping in the developed world, and they're being made up to a certain extent in the developing world. But what they can do is they can close down factories. They can just bring out more efficiencies, and you've seen that. So revenues, volumes are flat, revenues up a little bit, but the bottom line just carries on getting better. Margins are just getting improved. Year in and year out.
Yeah, I mean, revenues up 5% in constant exchange rates. They've got pricing power too, because once you've got people addicted to your product, provided you don't outprice it substantially, people are pretty brand loyal. Somehow they think that sticking one burning thing in their mouth tastes different to sticking another burning thing in their mouths. It's a pretty secure market.
And people often criticize these companies and say, but you're not allowed to advertise. That's the best thing about British American Tobacco, because you will never ever get a new competitor to come in. So it's a wonderfully captive market. And if you look at the amount of money that goes to taxes, it's something like 80% of every box sold goes to the taxman. So they can raise their prices just a little bit, and it has a huge effect on their bottom line, but not very big difference on the price of cigarettes.
That's terribly important as well. And also governments, Mohammed, like these industries, because provided they can balance it out with a little less healthcare spend, there is a very nice revenue stream for them.
There's a nice play. I mean, your collection cost is practically zero. It's a cash cow. They sit and they milk this, and that's why we see sin taxes going up year on year. It's because people are not going to stop drinking overnight. They're not going to stop smoking overnight. So it's easy to tax those things. And the other thing that springs to mind, which is quite topical for this week, is the fuel price.
Yeah.
That's another one where your cost of collection practically zero.
How much more does a tank of petrol cost today relative to what it did 9 months ago? 50-litre tank. Give me a number.
Probably 150 rand.
Okay.
Yeah, I'd be close on that. So about 12-15%.
Okay, 119 rand more. I mean, it just, and you look at that impact on South African households, it suddenly becomes quite substantial, especially with people who do 3 or 4 tanks a month. It's a 500 baht cost in the monthly budget. It definitely has additional cost in the monthly income. It has a big impact. MTN, not nearly as impressive as Vodacom. Who wants to go?
Either way, I think if you look at the two, if you look at Vodacom, certainly as we stand today, looking a little bit cheaper than MTN, dividend yields a bit healthier as well. Subscriber growth, something that's quite interesting. So MTN plays in a lot more interesting jurisdictions. We've got the Iran, we've got some of the other jurisdictions across the rest of the continent. But that industry, it's a mature industry. Again, it's something that's moved from high growth industry into a cash cow, a bit of a cash cow. I think a lot of them still a bit expensive, but between the two, Vodacom looking like the preferred play over the shorter term.
And they're doing, this is an interesting topic, they're doing the right thing with their dividend. So when you've got a mature business that generates a lot of cash, with not too many local growth opportunities, rather pay it out to shareholders. I don't mind not getting a dividend if there's growth potential, but in a business like Vodacom, and we saw it with Telkom for a number of years, rather pay me the money, because if you reinvest it, you're probably going to actually just flush it down the toilet. So doing nice
as
things.
Telkom did.
Absolutely, and we've seen it with a business like Altec, who've now had to cut their dividend. Now that was a massive cash generator, but they reinvested it into poor regions, and it's hurt shareholders significantly.
The cost of growth can sometimes be absolutely very, very dangerous. Clicks running out of steam.
We've seen a bit of pressure across a lot of the retailers. I've been surprised at how strong Massmart, for example, has held up, given how stagnant their sales have been. So just another small indicator that these price for perfection retailers are operating in an environment that is getting a little bit more difficult. I mean, it's a wonderful story, Clicks, but not surprising that they are finally seeing some headwinds.
But Clicks, what a great turnaround story it's been. Can Richard Brasher, who 3 months ago took over at Pick n Pay, can he do for Pick n Pay what David Neal has done for Clicks?
I think it's a tall ask. I think he's coming into it maybe at the wrong time. The market, the momentum that carried us in the retail sector over the last 3-4 years, maybe even longer. And that's starting to ebb out of the system. The consumer's coming under a bit of pressure. So even though the strategy might be something that would be worth looking at over the next few years, I'm not excited to get in right now, simply because the sector as a whole is not attractive to me. A lot of those stocks are looking extended. If you have to play in that sector, they're relative value plays, and maybe someone there is going to go with a bit of a speculation that he can turn that Pick n Pay around. Quite frankly, I'd like to avoid it completely.
Okay, and you, Nick?
Yeah, this is the interesting thing. It's got a lot of bad news and been under a lot of pressure, but it's not priced particularly cheaply. It's not really priced for that. So
the market was anticipating that there will be the turnaround, and we're paying the price today for his turnaround.
Absolutely, and assuming that the whole sector, which is at record highs, is going to carry on continuing. So no, that's certainly one to avoid. Even if he does a good job, even if he does a great job, I don't think you're going to do that well as a shareholder.
Is Comairs share price at the moment reflecting the huge premium that they've now started charging on tickets now that One Time is dead?
Yeah, I was looking at the share price, and it ramped up just as One Time obviously went
so
under business. So it's doubled, I think, in the last 6 or 8 months.
But the market had anticipated that with One Time out of the system, 1 million seats out of the system, they would get the pricing power. Now comes FastJet, which is a company owned by Lonrho, controlled by Lonrho, operates in Tanzania, going to start its first flights, Cape Town, Joburg, Cape Town, 2 flights a day from the end of May this year. They tell us they've got the paperwork, and they've also got that nice Mr. Edward Zuma on board. That's why they've zoomed into South Africa. You talk to the guys, you say, well, political connections are important. It's despicable, but really good news that we're getting competitors at least into the space.
Great for us, but I think, I heard a great quote and said that people who invest in airlines, or when people who start airlines, have got a bad appreciation of history and economics. So it's a terrible business to be in, and not one, even with a high profile, highly connected individual on my board, I'd still be very wary of getting into this business.
And also, then how do you go to Dad and talk to him about the problems in the business you're invested in when the chairperson of his own trust is the chairperson of SAA, because the chairperson of SAA is the chairperson of the Jacob Zuma Trust. SAA has got the pricing power. These guys are talking about undercutting SAA. Family lunches. Big and complicated. Right, Alan Clark. This is a very sad story. I mean, Graham Mackay on Monday goes into hospital, has an operation for a brain tumour. We hope he recovers. We really do. We hope he recovers very well. But the company bringing ahead its succession planning, and as Anne Crotty said in Business Report this week, just doing it in typical SAB Miller style. Okay, right, we've got a problem, but we've got a plan. Let's put the plan forward. Bang, there it is. Nicely sorted. Shareholders didn't even blink.
Agreed. I think on the day when the news broke, the stock was actually up.
Yeah, 3.5%.
And that really telling you that shareholders are believing that there's a strong management team. I think the fact that they've guided the markets, there was a clear succession plan, means that notwithstanding the unfortunate circumstance they find themselves in, there is a backup plan, and the market really taking it in its stride. SAB Miller, again, one of those companies where it's looked expensive for a long time, but they operate on such a diverse geographical base. It's the kind of market that's quite defensive. I think shareholders taking that in their stride, and really not much of an impact coming through on the price there.
And I think if you look at the stage in the business's life cycle, it's done a lot of acquisitions, and it's bedded most of it down. So they're not going out spending billions every week now. It's more just continue to operate, improve the big market share that you have.
They're cell-phone-ish in that way, aren't they? I mean, they've kind of reached a size where they can't do that much more.
Yeah, so it's probably less important to have some astute deal maker there. As long as you've got a good operational person in who can continue to run the business, then you're fine.
I want to talk about Apple, but I think we should talk about it in the next segment, because Apple came out with results this week, or trading update this week. It's not looking nearly as exciting as it was under the late Steve Jobs. Also, they've done some tinkering with the iPhone 5, which is making some of its customers quite grumpy. The only person who's really a big Apple fan this week was Michael Jordan, the chief executive of FNB.